Vincent Randazzo, you are a chartered market technician and the founder and chief market strategist of ViewRight Advisors. Your firm helps investment managers with minimizing losses and maximizing gains. Can you talk about your firm's philosophy and strategy in accomplishing that?
Sure. Well, thanks, Chris. Thanks for having me. It really is great to be able to speak about something that we think we're doing really differently. So, after about 25 years of working in market research and portfolio strategy, I saw that many financial advisors struggled with a simple, but to me, centrally critical problem: how to manage risk in equity portfolios without missing out on opportunities, right? So that's why I built ViewRight, is to give advisors a systematic way to protect client portfolios during those downturns while still capturing the gains. So that's the philosophy.
And how exactly can advisors go about accomplishing that for their clients?
So what we do is we basically are filling a gap in the market, right? So many of the long only portfolios are exposed to sudden drawdowns. And I think, this week with a little bit of volatility is kind of a good example for that. Not that we're necessarily looking for small drawdowns. We're really trying to avoid the big drawdowns, right? But those drawdowns over time can really impact in a rather dramatic way compounding over time. Just that simple math equation changes so much when you have these huge drawdowns intermixed with your gains. So we're just trying to avoid those big drawdowns. And when you do, that math just works so much better for you. And those traditional approaches, they often rely on, I would say, intuition or lagging indicators. And that leads to missed opportunities, of course, unnecessary losses, and to me, a lot of emotional involvement. And if the answer also is buy and hold, frankly, kind of why bother when it comes to a financial advisor, right? I mean, you basically get that for free with index ETFs. So, that to me is a point of differentiation. How could we help advisors sort of raise themselves up and give themselves an edge? And wealth managers, they need a reliable, evidence-based way to reduce risk, preserve capital, and then maintain that client confidence, right? And of course, all this without spending hours of analyzing the data themselves. So that's what we do. We basically give advisors the answer through our research. So it's delivered in the form of research, and basically we do is we provide the signals to the advisors of when to take risk off, and we do it graduated. So it's not sort of binary. Okay, we're all out or we're all in. It's out gradually, and then we go back in. And it's also very low turnover. So some of the other services that are trying to do this out there right now, of which there are very few, by the way, most are either too fast, so you're sort of always trading in and out. Nobody can really do that, especially not as a financial advisor. You can't move that fast. Or they have these binary signals, which is just, okay, we're all out or we're all in. And again, nobody really invests like that anymore. It's not the 1920s. And then the final problem I find with a lot of the other people who are trying to fill this void is that you basically have sort of imprecise verbiage. So they might say something like, "Oh, we're getting more defensive," or "We're getting more aggressive." It's like, well, what does that mean for my portfolio? And have you tested it in a historical context, right? So that's where we're trying to stand out.
And does your firm usually take a macro approach to markets? Do you look at things on a sector level, or how detailed does it get?
Great question. So, a question I get a lot is, how do you do this, right? Like, what's your process and why is it so reliable? And what we're doing here is, after I studied, and this is just everything I've learned in my entire career. I've worked for Morgan Stanley, UBS, NASDAQ, Lowry Research most recently, where I was the head of technical analysis. What I've learned through my entire 25-year career, plus studying over 100 years of major market tops and bottoms, is that market breadth is actually the most reliable form of indicator that I've been able to find. And again, this is my specialty, technical analysis, and within that, breadth analysis. And I'm someone who likes to dig into the details. I'm very analytical, right? So what I found is that you have tops and bottoms, and they have all these common traits through history. No matter what the environment is, if you sort of trust the idea or the fact that the collective intelligence of market participants is sort of deposited in market price and in market data, then you can look at that data for clues as to how fragile or how firm an environment is. And that's what we're doing basically.
And finally, you're based in Florida. Do you work with advisors all over?
Yes, we've got clients all over the country right now. We have also clients all over the world. In fact, we've got clients in London, in Asia, Hong Kong. I deliver my product online. Everyone gets the same reports at the same time, and everything's accessible right through email and through the website. So we make it very simple.
Vincent, thank you very much for your time.
My pleasure, Chris. Thanks for having me.